Good morning, everyone. This is Frontier Opening Bell. Today is the 28th of August. I am Bosun Omofaye. Welcome to the show. Ali Kansachu at Rich Frontiers Management, the CEO, and of course, Ijoma Onyeka from Diva Capital Management. Thank you, both of you. We appreciate your time.
Thank you, Bosun.
Thank you very much. A quick rundown of Africa's equities market on Wednesday. Showed a bit of continue to see mixed. Egyptian market was up by 0.75%. Egypt will be off from today to the weekend for a public holiday. The Nigerian market made a bit of a bigger size in terms of a comeback on the oil sharing there, 0.14%. The South African GSC, Kenyan market, and the Ivorian market finished in the negative territory. Look at the Kenyan East Coast market where COVID-19 corruption cases keep arising in a number of countries all the way down to South Africa. Meantime, the Nairobi Securities Exchange has notified that it's going to review the NSE 20 and 25 indices, the components of that. Infrastructure bond was the biggest story for me from East Africa yesterday. The 11-year paper oversubscribed 144.9%. That is massive. Meantime, tea and coffee exports yesterday helped the Ugandan shilling to remain steady against the US dollar. Ali, I want you in on this infrastructure money. It's huge money, and I'm interested in how this is going to work out.
So we've spoken about this before. We've seen a massive liquidity buildup in the banks. They have obviously reduced lending to clients, although not as dramatically as one might have expected. And the central bank has finessed this liquidity into the Kenyan bond market, specifically at a time when they're increasing the total volume of borrowing. And we spoke previously, they'd sort of shovel the cash into the T-bills, into the one-year maturity, and now they've started to extend people out the curve. And this is a significant success, a significant oversubscription, and I think they've really done extremely well in conducting their operations. That's without a doubt, and that's evidenced by this oversubscription. Double-digit yields, obviously attractive for the banks. Local banks see it as a credit risk-free instrument, and therefore it's proving very attractive. But it's taking liquidity out of the real economy. But the real economy doesn't have a huge demand for it. Your other stories, EM and FM, this is the divergence we're seeing in some emerging markets and some frontier markets. Africa underperforming. EM's South Africa currency, Brazilian real, and the Turkish lira getting hit quite hard. And that's a very noteworthy divergence. People all speaking about the very weak dollar, but the dollar has been strong against most EM and frontier market currencies. And then your story about the reconfiguration of the NSE 20 and NSE 25. Yes. This is the likes of Kenya Airways being removed from the indices, Jubilee and Stanbic coming in, both very, very solid companies who deserve to be in those indices anyway. So, but, just to tell your listeners, NSE 20 is at a 17-year low, unfortunately, and doesn't look that bullish at all at the moment.
Okay, we have a bit of a similarity when it comes to how the central banks and the authorities are piling cash, liquidity in local currencies into the various asset classes. So that spoke to yesterday's DMO auction. When you look at Nigeria market now, the debt auction report is out. The subscription was massive, north of 200 billion, despite the fact that the debt management officer took in a lot less than that. Aggressive participation there. The stop rates, nearly all the rates on the reopened 3 or 4 tenured papers for 10 years, 25 years, 30 years were all below inflation level as we speak. But again, the appetite is for long dated tenors in terms of the allotments that we saw from the debt management office. Meantime, the OPEC meeting still in the in the news, as it were, for Nigeria, of course, very particular because of the call between the Saudi Arabian leader and Nigeria's leader, President Buhari. Meantime, Nigeria's insurance sector regulator reminded everyone that recapitalization phase 1 remained December 31st, and everyone should get ready for that. Ijoma, what's the latest from the marketplace this morning from Diva Capital?
Well, yeah, you definitely read out the headlines. The DMO auction yesterday, there was a massive oversubscription. However, we saw the DMO actually undersell. They undersold by somewhere around 36 billion, somewhere around 36 billion naira. Which was, in our opinion, a signal to the market that they were not looking to just sell volumes. They were looking to actually cut their borrowing costs also. So we see that they still kept the stock rates at the point where they've sort of been maintaining it, and it's not like we can definitely understand why there's significant oversubscription in at the bond auctions. If you're looking at the money market, the T-bill space, we're seeing 1-year treasury bills at the NTB space go for just over 2%. And the 1-year OMO bills go for just over 4%. So definitely investors are looking to lock in higher rates for longer, but the DMO is looking to keep rates where they are, and so we are seeing that massive play. By the time the next auction comes around, it will be a battle of wills between DMOs and investors. And then on the OPEC meeting, yes. While the previous OPEC meetings have been about either adjusting or readjusting production cuts, this particular OPEC meeting will likely not involve a revision to the OPEC cuts. The oil price, the oil supply concerns remain. All demand drop concerns remain. Recently, this month, we saw OPEC cut their oil demand forecast for 2020 yet again, and so we believe that they would likely maintain their cuts, but this time around they would likely be focusing on compliance levels of some of their key members, such as Nigeria and Iraq, who have been serial undercutters. Yesterday, as you mentioned, the Kingdom of Saudi Arabia had a call with President Buhari to discuss compliance levels and why it is important. According to data that the OPEC has received, Nigeria has done better in their compliance levels for July, but secondary sources are giving conflicting figures. So by the time the official figures come out, we'll know where Nigeria's and Iraq's compliance level stands. But as for this particular OPEC meeting, compliance level will be the main focus.
We'd like to get Ali's comments on the OPEC meeting and again the developments in Mali. But very quickly, let's go through South Africa's Southern African markets. Yesterday, the GSE went down about 1.04%. That was quite a very big, sharp decline for the largest securities exchange on the continent. Of course, not just equities, as bonds, gas, derivatives, and all of that. So it's a financial supermarket, as it were. Meantime, Vodacom, Black Empowerment Program report says there are about 73 million rands of unclaimed dividend belonging to about 12,000 shareholders. That's quite a whole lot of money, according to the Vodacom news. Meantime, the GSE yesterday listed the SATEX Global Bond Index ETF. That's, of course, raising the game to provide an opportunity for SMEs within the country to have access to very funds they could use. But again, Ali, let's bring you in here to the Southern African story. I know the oil story is there, the demand. The Saudi Arabia's energy minister spoke about the fact that there will be strong demand in Q4. But again, oil prices started tapering as we wake up this morning.
So let me start with the OPEC comment, the Saudi minister. 97% seems to me to be a Hail Mary pass. I just don't see how we can say in the Q4 we're going to be just down 3%. I mean, that to me is an incredible call. You know, even if there is a Sputnik vaccine or any other vaccine you care to mention, we're not returning back to normal.
Yes.
It's not a V-shaped recovery, and we can already see, particularly in the developed markets, that there is some flattening of the rebound that we were previously seeing. If you look at mobility indices and so forth, so I think, you know, I commend OPEC on their outstanding performance in getting the price back up here, but I think it's going to be hard work pushing on from where we are now, and they'll have. But final point is, those shale boys have been crushed, and let's be frank about that. They are no longer in the game in the way they were 12 months ago, so that's also helped OPEC considerably. JSC down 103%. This was volatility in the gold price, volatility in the stock markets ahead of that Fed meeting, and then the markets have been coming off since the Fed did not talk of yield curve control. Look, they want to hold something in reserve. They can't just throw everything at the market. I'm sure yield curve control is basically being deployed in some shape or form. Coming back to finally Vodacom, it's surprising, given that they should have everybody's mobile numbers, that they got that sort of quantum of dividends sitting on their books. I was quite surprised by that. JSC, this new bond index, you know, this is all about supply coming out of South Africa to fund this deficit. You're going to see many more bonds being issued by the government, and obviously they're exploring all the options to encourage the markets in order for that take up to happen.
Also, just a quick one about Mali and the developments there. Ijema, what's your take on this political crisis, and what do you think how has this been handled within ECOWAS?
So to be fair, Basin, I haven't gotten very deep into the Mali story. However, I know that you know, this is whenever there's a case of political unrest, ECOWAS leaders, especially Nigeria and Ghana, typically try to step in to ensure that you know, things get resolved and there's no damage to both human lives and also the economy at large. And I expect to see you know, something of that nature occur also.
Yeah, Ali, again, what we got from Reuters was that stability, Barrick Gold, the rest of them says they're going to keep digging. This is one big country with big gold deposits. So it's digging as usual.
So look, I mean, you know, I think that's a very bullish call that these gold producers are making. We are in now a fluid and uncertain time in Mali. We've all been watching the screens everywhere we are, and you know, my concern, Boasson, is this is not an outlier. This is a precursor of what might happen in other countries on the continent as we get hit by this slowing economy, a failure to provide for our citizens. Obviously, Mali is a special case. It's been relatively unstable. We have had the French intervening there, particularly last year when 2 of their helicopters crashed in the dead of night, and no one knows the real story behind that. So there's been plenty of uncertainty. But my read of the situation is this is, people call it the demographic dividend. All our young people, I saw a photograph of them swimming in Keita's son's pool. And the thing is, the demographic dividend can very easily turn into a demographic terminator, because a lot of our people have high expectations. And if our leadership cannot deliver, we're going to see a lot more of this. So overall, the worry is contagion. The worry is this does not resolve itself quickly. I don't see that happening. And, you know, the African Union, I'm afraid, in these instances tends to side with the incumbent without reconciling the two sides. And I think they really should be looking at a proper process of reconciliation here, because otherwise this could spill out of control.
I get your point. Ali, because again, it becomes very difficult to try to understand. Look at the developments in Lebanon, for example,
Yes.
and within a protest, within 2-3 days, the entire cabinet decided to resign. So if you look at Mali, these conversations have been going on for weeks and months, trying to bring both parties to the table and what have you, until there's a third force seems to, so to speak, which is the military boys, now stepped in. So sometimes it speaks to whether African leaders take governance very seriously and take protests by the people and discussions. Say, look, we need to step aside and form an interim government quickly. I think while they were dilly-dallying, Nigerian president went up there to Mali as well with a few others to try to intervene, went to Bamako, even during this pandemic period, tried to intervene. They didn't listen until some young boys brought out the bayonets and chased them out. So it all looks up to, how we need to rethink, African leaders need to rethink governance. Because again, you know how many years the military boys in Mali now are going to stay there. As we're saying, they don't know when they're going to return to democracy, and the all economic impact north of Nigeria, where you already have insurgency between Mali, Chad, Niger, Nigeria, Cameroon, that corridor, all the way down from Libya. So it brings a whole lot of questions into how much you now have to pump into insecurity by Nigerian authorities, by the Malian authorities, funds that could go into healthcare, food, and provision of social amenities for the people that have to go and keep in insurgents and various factions that might develop out of that country. I think it's a conversation we need to keep out there on how we need to rethink leadership position. If the folks says you need to resign, well, maybe you just need to go and let's make arrangement for another. So that smooth transition of leadership would not result in problems of this nature. Of 40, 30 years over, we still have a military dictatorship come back to take over civilian in Africa. It is not a good news on TV, as you put it, Ali, correctly. Look at the Northern African markets as we begin to shape up the final part of the show. Egypt has a news story there. Ali, I'm sure this is one sweet story to my ears yesterday when I saw the completion of the 8-kilometer oil pipeline at Alhambra Petroleum ports. This is just big how the Egyptians are moving on, ramping up on oil and gas north of the continent. What are the Egyptians up to?
So you know, look, it's a huge market, Boasson. We're talking about over 100 million people. So the consumers, if you're a seller of oil, the Egyptian market is one you got to pay a lot of attention to. And they keep investing in their infrastructure. And this is another example of that, also beefing up the facility to over 1 million barrels per day. So I think that's the story there. But the other story also is, of course, they seem to have found quite a bit of gas and some oil, and obviously trying to increase their degree of sufficiency, internal production as well. So overall, you know, whether it was a Suez Canal, whether it's infrastructure, these guys keep the dial moving. And I think that's something that investors like to see. Through all that turbulent period, they made key investments and they continue to make them. I mean, this is not an easy year to be doing infrastructure because money's tight, but that's evidence to me that this regime, from an economic point of view, you can't argue with them.
No, you can argue with them. Again, when you look at the kind of speed at which project execution of this nature takes place in Egypt, and you look at Nigeria with many more years of experience in the oil and gas industry. Egypt, when you see stories like this quick story done by Egypt, I'm sure sometimes we're green with envy looking at ourselves down south of the Sahara.
Yeah, I definitely agree with you. Nigerian crude production has not ramped up significantly in decades. We've basically been stuck. We've basically been stuck at the same production level that we have been for a while now, and this is down to really unclear and very ambiguous policies, and even when we have some clear policies, there's a lot of inconsistency, and then there's a strong lack of infrastructure to support it, and then we also have the continuous exchange rate problems and insecurity crisis, and we're definitely seeing a transition from Nigeria being the one of the only crude producers in the African space. Previously, it used to be Nigeria and Angola that were the major crude producers, and now we're seeing other countries ramp up their production to catch up with us. And if care is not taken, we might see them catch up and even overtake as we continue to battle with our challenges.
I agree with you. See all the investment flows into Egypt, by the way. Once you get serious with your policies and actions, by the way, importantly, not just policies, but actions. Once you get serious with that, investment flows start coming through. And if your years of project execution is fast, speedy, right on schedule, that's what the market wants. That's what investors want. Nobody wants any projects being done for 5, 6, 7, 12 years, and no one is sure what is going to happen within 2, 3 administrations. You can't get one single pipeline project done. It's not good for the world of business at all. It's not ease of doing business, whatever anyone says on paper in terms of ease of doing business policy. Speed of execution, I'm sure Ali knows this. When you do trade, speed is everything.
It is, absolutely. And I can't agree with you more. Execution is key. I think you've got to give them full marks up there. They don't dally, they execute. It's as if the political environment is irrelevant to execution. And ideally, if we are going to develop as a continent, the political environment is always going to be volatile, and we've got to learn to live with it, and we've got to learn to execute, notwithstanding what's going on.
Thank you both, Ali. Thanks for bringing us as the last final touch payoff line for today's show. Thank you so much, Ali Kansach, CEO and founder at Rich Frontiers Management. Thank you so much. And Ijoma Onyeka from Diva Capital Management. Thank you, both of you. Have a great day. And tomorrow is Friday. Let's get together on Frontier Africa Report once again. Thank you very much, and we appreciate it.